All right, everyone, welcome to our VantagePoint live stream today, where we're going to be covering some of the mega cap giants. Just taking a look to see, are they still worth it? So let's go ahead and get started.
Today, where we're going to be
Give me just one second here.
Just taking a look to see, are they still worth it? So.
All right, sorry about that. Technical difficulties, gotta love audio issues here, but we are good to go. Everyone should hear me loud and clear, so glad to be on the session for today. We're gonna go ahead and jump right on in to our session. And before we do that, I just want to give myself a quick intro and just make sure everybody knows who I am. My name's Nikki. I'm the VantagePoint University head trainer here with VantagePoint AI. And one of the most important things that we do here every single day is educate our family members on the different market conditions, the different technical analysis, and really how to be better traders with more information. More informed trade decisions always lead to more confident trade decisions. So that's kind of our motto here, and I'm excited to have everybody here with us today. So let's go ahead and dive right on into the software. So we'll jump back over to our VantagePoint software, where we're going to kick it off with these mega cap stocks. So I've got some of them already pulled up. Most of you probably have seen these names a million times in the markets. Maybe you've traded them yourself. Well, today we're going to take that deep dive into those mega cap stocks just to see what their recent trends have been, where we're expecting them to go, and then also to maybe what are some other alternatives in the market that are similar to these mega cap stocks, but maybe that you haven't thought of before. There are a plethora of opportunities in the markets, and it's important to know where to look for those types of opportunities. So as we dive into our education today, if you're a VantagePoint family member, then welcome back to the session. But if this is the first time that you're maybe joining us, or maybe you haven't heard of VantagePoint before, if you could let me know in the chat. That's going to be really important for me to make sure that I know who's communicating with me and what level we need to go through, whether we need to start with basics, which we usually do because it's always nice to recap, or whether we need to dive a little deeper. I'm sure we'll hit it all here in the session, but don't forget to chat with me when we go through to make sure that we get all questions answered. All right, so let's go ahead and dive right on in to our assets today. Now, of course, our session here today is on mega cap, so I do have most of them pulled up. Who in the session was along for the wild ride in the markets today? That's my first question. So let me know in the chat, and we'll get everything going, and we'll of course go through your questions too. So don't forget to engage in that chat. And if you again are a first-time user in VantagePoint, or just now hearing about VantagePoint, you can also find more information at VantagePointSoftware.com. So we'll put that link in the chat as well. So let's get started here. Okay, so if we take a look at Nvidia, all right, now Nvidia is one of those that has had a wonderful ride here recently, right? It's always nice to ride the wave, especially on some of these giants in the tech area specifically. And so when we are looking at VantagePoint, for those of you who are not familiar with VantagePoint yet, right now you will be after this session, you do want to look for really 4 very, very simple pieces of confirmation when you're looking at trend expectation, okay? So again, count them 4, right? You can take notes if you want, but you really do want to look for 4 pieces of confirmation from the very get-go, all right? And that's always sometimes the most difficult part about trading, is just understanding where do you start? How do you even identify a trend? Well, VantagePoint makes that very, very easy. All right. So when you see green in the VantagePoint software, I want you to think of bullishness. When you see red, think of bearishness. We'll keep it that simple because it is that simple. There's no need to overcomplicate things. If you can create simple confirmation, you have a lot of confidence from there. And so using our crossovers, these are proprietary predictive crossovers that do incorporate predictive data into your analysis. And so what we have here is a crossover where our blue line is crossing over the black line. And when we have that blue line crossing over the black line right here where my crosshairs are, you can see that's going to be a bullish signal. All right, we come down to confirm that bullish signal with the green, what we would call neural index. Now, this is an indicator of price action. So with that price action, we're going to confirm the trend. We've already looked at the trend. Our trend is right up here where the blue line crossed over the black. Now coming on down, we're going to look at that neural index, and we can see that's also green. So great. Trend and price action moving simultaneously. We like that. That's confirmation, right? So next piece is going to look at the predictive differences. Now, we call them predictive differences. I want you to think of these as strength of the trend. Basically, do we have strength coming into the trend? Is it starting to push on the gas pedal, or are we pumping the brakes? All right, that's probably the easiest way to think about strength when it comes to the markets. But understand that there is very, very, very important data and very important information in the strength of a trend. And we're going to dive into a little bit more into that a little later, but stick with me here and we'll get there. So we can see that these three predictive lines, now again, they're predictive, all of this data is predictive, are actually moving up, which would be in the direction of the trend. So basically, is everything in agreement? When things are in agreement, it just moves much more smoothly, much more confidently. That's life, right? Same with the trend. So here we have our points of confirmation, our crossover, our neural index, our predictive differences, and then eventually we are going to get to what we would call that predictive trade candle. So that predictive trade candle is going to help us to see what the next day predictive price action is expected to be. So with that predictive price action, you can see what the predictive high is and the predictive low. Who doesn't want to know the trade range for the next day? I know I do, right? And it provides a lot of fantastic information. So let's jump on over to that predictive trade candle for today. Now, I know Nvidia had a bit of a rough day, and that's okay. We were sort of expecting that if you're looking at the predictive data. You may not have been expecting that if you were not. And well, now you know where to find it, so you're welcome. But here's the most important piece is looking at all of this together. We've now looked at the crossover, we've looked at the neural index, and now we're also going to look at, the predictive differences, and now the predictive trade candle as well. So you can see the top of this gray bar, and we can actually zoom in. Software is very easy to navigate through. Just use those little zoom buttons like you would on a map and let the software map the market for you, because we were expecting a high up here at the top, but a low down here at the bottom. And, Nvidia closed right around towards the bottom of that predictive trade candle. So reaching with price reaching within this predictive trade candle makes it very easy to set profit targets, set stops, or also better place your entries into a trade as well. So a lot of information, a lot of fantastic, very valuable data that you can incorporate into any trade strategy. Now, I'm not a licensed advisor, so I'm not going to be giving you any trade advice here, but what I am going to be doing is educating you on the technical analysis and incorporating that predictive data using artificial intelligence from VantagePoint in that technical analysis so you can apply that to your own trade strategies. And I'm pretty confident in saying that most of you could benefit from having a predicted high and low range during the day, as well as predictive price action and navigation through the trend. So we're going to go ahead and just back this up a little bit further. So that's our trend on Nvidia, right? We can see we're still in a bullish trend. Let's look current day. We looked at the past to see how these indicators work, but currently, what are our indicators telling us? Because I did say we were expecting a little bit of weakness, and you might be thinking, how? It's green. The trade candle's green, right? But that's where the confirmation comes in. And so let's look just down a little bit further, and we can see that yes, the neural index was bullish, right? Because that neural index looks at price action over 2 days. So even if our low was higher than 613, we're still expecting bullish price action there. So navigating through some of those dips and turns in the market is where I find most traders struggle the most. And I can tell you, working with thousands of traders, that position management is often where it's kind of that make or break scenario. So knowing how to navigate through these trends is very, very critical to any trade strategy. So let's take a look then at our predictive differences. Do we have all three of these in agreement? And the answer is no, right? We actually have the two more conservative predictive differences, which is strength. So you can think of this as predictive strength for easier concept here. But our medium term, which is looking out kind of over a 2-day time period, is actually fairly flat. It's telling us there's not a lot of strength happening here over the next 2 days. Now, our more conservative, the longer term, is actually coming down. So again, confirming that there's not a whole lot of strength here. And the shorter term indicator is actually giving us a little bit of strength. So we have some contradiction, one going down, one going up, one going sideways. Well, in my book, that's not agreement, right? We have these indicators that are telling you, hang on, you should be cautious here. And whenever you can get a heads up to where you need to better manage your risk, or where there might be higher risk in the markets, can save you from a whole lot of heartache later on. So make sure that you have good agreement between your indicators, whether you're using predictive indicators or using, traditional lagging indicators. You do want to make sure that you have that agreement and confirmation so you can make the best trade decision for you. In VantagePoint, you can just do that proactively the night before, so you're not caught off guard by some of these market moves. You've already got that information right there in front of you at 6:30 p.m. Eastern Standard Time every night for the next trade day. So that's Nvidia. I think that gave us a really good breakdown. Let's move on to something that's been a little more volatile here lately, Tesla, right? Any particular questions on Tesla? Because this is a market that, I always have so many questions about, and I was glad that I just had it pulled up already today, because this is one where most traders are like, well, let's look at Tesla together. And okay, let's see how the predictive indicators worked through, the different tweets and news announcements and things of that nature, because the data doesn't lie, right? There's always things happening behind the scenes before, things break the news. We, as, humans, are not privy to that information unless you're following the data, unless you're following the money. And that's exactly what VantagePoint does. So just to kind of pop the hood on this here for everyone in the session today, I'll in fact just pull on over our market details here. And we can actually see in list form, we have the top 31 markets that are really impacting Tesla. And that's the power of the artificial intelligence here, is that it's going out and identifying across the world, worldwide, what markets are impacting Tesla. Not only just do they follow the same pattern, that correlation, but how are they driving Tesla? Are they pushing, pulling? Are they holding up Tesla from a trend standpoint? And so you could also look at this in the form of a graph. This is my favorite because I'm a fan of, color coding, but here we can look at several different stocks that are impacting Tesla. We could also look at ETFs that are impacting Tesla, and we can also even look at currency markets that are impacting this particular asset. Now you can do this on any asset in VantagePoint. This is critical though to the artificial intelligence, because it's all of the data from these markets, this inner market analysis that the neural networks and the artificial intelligence in VantagePoint is pulling in order to forecast using our predictive leading indicators, like those blue lines, the neural index, the predictive differences, and yes, the predictive trade range as well. So whether you're just seeing this for the first time or you're a VantagePoint family member, don't forget that data is important to analysis, and you have to have the right data, and you have to use that data wisely and accurately. And that's what AI does for you. We're just kind of seeing a lot of, about that now, but VantagePoint's been doing this for many decades now. So let's see what our artificial intelligence tells us about Tesla. All right, so here we have one of our more conservative crossovers, which is the triple cross. So the triple cross is great for that position management, as I was referencing before, because here we could actually use one of our shorter term crossovers for potential entry. It's going to largely depend upon your trade strategy. So have a trade strategy, basically have a plan, trade the plan. It's really as simple as that. We as humans try to overcomplicate things, but no need. Have a plan, trade the plan. So if you are using, for example, maybe your medium term crossover, which is more conservative, it's like a swing style indicator or leading indicator. It looks out 2 days, as I mentioned previously. And this is the default indicator on VantagePoint, our medium term crossover. And that's because VantagePoint is built for that swing style of trading. So using that medium term crossover, we can see we have good confirmation and confidence in the trend here. Now, notice that yes, we have a crossover back here, but it's very important to point out that not only do we have that crossover bullishly here, but look at all of this that it kept you out of, right? I mean, this is almost a 2-week time frame where Tesla was just toggling back and forth. So avoiding bad or marginal trades is just as important as picking the right asset at the right time. And so VantagePoint can help you out here because clearly it says, don't be fooled by this, right? We've got some bumpy roads ahead until we have full confirmation. Look, up until this point, everything to the left here is giving us that bullish confirmation signal. So when we get that bullish confirmation signal, that's when you've got confidence to then say, hey, all right, the bullish expectation is here. What you choose to do here is up to you. What your position size is, whether you're buying the stock, trading the asset, trading options, so many different types of opportunities here just at looking at a single chart, lots of different ways to trade. And then using that medium term crossover, but switching over to potentially another crossover for position management, such as the triple cross, because again, this can help you navigate through those dips in the market trend. Again, this triple cross tells us that, hey, we are still remaining bearish back through this area in April where there was such volatility here. But when do we really have the bulls starting to come into this market? Starting on 424 with our crossover and then coming on up, managing through here. Who's gotten stopped out only to see that market rise up exponentially afterwards, and you kind of just shaking your head like, man, how did I miss that? I was there, I was on the train and I jumped, right? When that happens, I know that can be so frustrating, but using VantagePoint, remove that emotion, right? Because you can help to better navigate through the trend. And so as we go through our analysis on our next few charts together, I want you to remember this darker T-cross long line. Really, focus on that when we're looking at the triple cross, because this does act as sort of this very dynamic level of support in this case, because it's below price, sort of pushing price up. That's what support does. And so when we see price action approaching this level here, but our predictive differences and our neural index are all starting to shift back to the up direction, we know that we may likely see a bounce off of support because this momentum to the downside has dissipated and it's just no longer, it's kind of fizzled out, if you will. And so with that support just kind of acting like that trampoline, bouncing us right up off of that level to continue the trend. Now, these are predictive moving averages that you're seeing on the screen. So you wouldn't have this unless you're looking at VantagePoint. It's very, very, very powerful. These predictive exponential moving averages here in the triple cross can tell you a lot of information about the trend. Now, I also love it because it makes it super simple and easy. Who wouldn't like to look at their position on Tesla and see that it's green and have a lot of confidence on what to do with your trade at that point? Or look at Tesla and see that there's caution in yellow and you may need to adjust or shift strategy slightly. We did that very quickly. It's color coded. You can't get any better than that. But don't forget, there's predictive data in there too. So it's easy, it's smart, it's accurate. That's what you want in trading, right? So let's move on to something like Apple, where we've seen this just sort of trending sideways for some time. And this is where some additional indicators could help you as well to determine where those true support and resistance levels are. So we do have some additional indicators that you could look at, which is support, and we could also add resistance in as well. So who's using support and resistance within their strategies? If you could let me know, that would be very helpful. And that way we can dive a little deeper on some pivot points here. All right. I'm sorry guys, I'm looking through the chat just to make sure I don't miss anything. So that's great. Perfect. All right. So it looks like we've answered kind of a lot of those questions already. But yes, you do want to look for a clear crossover. All right. Now, when it comes to support and resistance levels, you can think of this as kind of supply and demand, where buyers sort of sit down here at support and sellers are kind of in the weight up there at resistance. And what this does is it causes this pivot point within the trend. So when you are looking at support and resistance, this can provide critical areas where you might be setting, or critical targets, if you will, where you might be setting, profit targets. You could even use those as stop losses, and, just so many different variations to use support and resistance. So if you're not using support and resistance in your trading, whether it's on VantagePoint or on another platform, you're really you're kind of trading blindly, if you will, because what you're doing is missing out on these key points that you could see ahead of time. All right. Now couple that with the predictive data, and you've got something really powerful here, even in something that's been toggling sideways back and forth. So let's just zoom on in fairly closely to Apple here recently, where we can see, I'll even just go to our shorter term crossover, where we can see we did have a short term crossover confirmed with our neural index here, right? Well, if you're looking at a shorter term expectation here, you could simply use resistance as a potential profit target here, right? Or even here if you're looking at a very short term. So this is the really, really valuable thing with VantagePoint, is that ultimately you can customize this based on your trade strategy. Now that's short term. You could also see we did have a crossover confirmed by the neural index here. So you could also have looked somewhere here using the predictive high and low values. And so let me just remove this right here. Now, looking at these critical pivot points, we have our support level that we bounced off of here, came up and hit resistance. Now, how did we know we were likely to bounce off of resistance within the next day or two? Notice our resistance level here was on 529. See where that arrow is? That arrow denotes the date that resistance level was established. And so on 529, we established a resistance level that came all the way out and impacted future price. Now, if you know where a level is that's likely to impact future price, that's critical to your implementation of potential profit targets, position management, you name it, right? So if we see price action never closed above that resistance level on 529. We tried to break it, right? We came up and actually touched it here on 6.3, right? So if you were setting that as your potential profit target, you may have exited out on 6.3. Now, again, I'm not telling you to do that. I'm just telling you that using support and resistance in this case as profit targets, can be very helpful to identifying those levels where you could potentially take profits if that is part of your trade strategy. All right. And if not, then use support and resistance as those levels where you may want to be more cautious, tighten up stops. We know that it's riskier here when price is bumping up against that ceiling. Think of resistance as a ceiling. So boom, we hit it there. We tried to break it and slam back down and close all the way below it. That tells us right there that we're going to have a very, very difficult time breaking that resistance level. And in fact, we've yet to, I think we tried to close one day above that resistance level on 529 here recently. So that old 529 resistance level is still impacting future price action as we speak, because we've never broken above except for, I think, one day where we closed above here on 6.6. Now, the true test of a break of support or resistance is 2 closes above. No, I'll repeat that again. 2 closes above will signify a potential breakout of that resistance. So if we were to have seen 2 closes above that resistance level, close here and close here, 2 closes right in a row, then possibly we could have broken up and continued on. But the fact is we didn't, right? And look at your predictive indicators. They're starting to come down already. The next day we have that bearish neural index giving us that confirmation that bullish strength is no longer on our side, navigating us through those support and resistance levels very, very quickly, very, very easily. So we can just use that as that sort of kind of ping-ponging back and forth of support and resistance. And we can see here, bing, boom, right off of price, right? Resistance here, and we bounce all the way back down to that previous support level here, which is in fact still impacting our future price action. We still have not yet been able to have 2 closes below that support level. So looking at the assessment here, if we can then get 2 closes below that support level, if we have a close and a close, 2 consecutive closes, let me be clear, so 2 back-to-back closes below that support level, that could signify a greater building of momentum to the bearish side. If not, then our support level would expect to stay fairly strong here in this instance. And if we do get some renewed bullish movement here within the market, then could we then bounce off of that support level? So your VantagePoint software can help you navigate through that very quickly, very easily over the next upcoming days here. So going through our analysis, now pulling in support and resistance, let's go ahead and take a look at Amazon, right? Amazon's another one of those that's just been on this amazing trend here recently. Who is in Amazon? Let me ask that. Is anybody currently trading Amazon or looking, or maybe they wish they would have gotten into Amazon here, back here on that major dip that we saw? Because if we can, break this down, let's go ahead and look at our crossover point where we had all things in agreement here back on 424. So on 424, now I was easily able to select that because I'm just looking for the blue line over the black line, clearly crossing with a bullish neural index, and our predictive difference is trending up. That's it. Now I would have also confirmed that with the predictive trade candle as well on that day. And so when we see that bullish expectation, this would be where you may say, okay, I'm going to take action again. That's up to you and your trade strategy, but this is a bullish expectation. So hypothetically, if you were to enter into a position here, then you're navigating through, we can see this blue line remains above the black line the entire time until right around here. All right, but let's go ahead and put on our support and resistance to see what else we could have seen that would have either given us a profit target or why we might have experienced some trouble up here on 513. Anybody seeing what I'm seeing? Who sees this resistance level here? So that resistance level right there that was established back on 325, well, price had trouble breaking through that, right? It came up, it tried to hit a new high, but we knew we were at extreme caution at that point because we're up against that ceiling. And so Did we know that we were likely to break through that? Take a look at your predictive differences. They're all trending up here. So we do have that break of resistance here where Amazon, sorry, it's back on our other chart, but Amazon here was continuing to climb with enough kind of momentum, if you will, to push us through, or enough strength. Right? So if you want to take a look at true momentum, then we can actually look down at our technical indicators. And we do have several additional technical indicators that you could utilize. But looking at things like MACD, RSI, even Larry Williams percent R, or TSI, even stochastics, I'll just pull up those sort of momentum indicators that are pretty common to most technical traders. And if you're not familiar, I'm sure you've heard the names before. So looking at this looking at this resistance level on 512, we can see, and the crosshairs mirror each other, so we're looking at the same day on each side of the screen, 512 and 512. How did we know that we were likely to break above that resistance level and go higher? Well, take a look at your momentum indicators here, and we can see with the blue line over the black coming up, that is bullish. We can see the yellow line coming up over the black, the colored line over the black line. That's what you're looking for, right? So we can see that that is bullish. Here we've got TSI coming up and bullish, and RSI, which is the relative strength indicator, also bullish as well at this time. So when you take a look at your momentum indicators to see, do we have enough strength to break through that ceiling? And we can see from the technical predictive momentum indicators that here, yes, we did. And so anything that you see here on VantagePoint that has that little blue dot next to it, that's going to tell you it's powered by AI. So although you might be familiar with some of these momentum indicators, I can tell you won't find them anywhere else other than VantagePoint, because these all have VantagePoint's proprietary predictive data already built in to those calculations, really supercharging those momentum indicators to give you more advanced notification and hopefully keep some of those emotions out of your trading so you can trade based on what you see rather than what you feel. So any questions on momentum as we continue on through our analysis? Yes. Okay. So perfect. We did get a question come through it. Should you check with the major industries, when evaluating a trend? And that's actually a fantastic question. That's precisely why I've got even one of our major indices pulled up here, looking at the SPY. So looking at the SPY, even the Qs or the diamonds as well are going to be your major indices ETFs, but you could also look at the industry ETFs as well. And some of those industry ETFs are actually a great alternative to some of these larger cap stocks as well. You take something like Tesla that has a fairly high price tag when it comes to price per share, not as much as it used to be, but still, when we look at some of these larger cap assets, not everyone can afford, $200 per share. And so we will look at some additional alternatives for those ETFs as well. In fact, VantagePoint has just added an incredible repertoire of new ETFs to the software because of the need for those exchange traded funds. So who trades ETFs? Let me ask that while we go through our analysis on the SPY. In fact, I'll even pull up our additional markets here, like the QQQ. That's going to follow the NASDAQ. The SPY is going to follow the S&P. And then we can also look at the diamonds as well, the DIA. And we'll actually take a look to see how we would have known where there might have been a little bit of trouble in the markets today, because that's a key to understanding. Now, similar like we looked at on Nvidia, where we knew that there might be a little bit of a struggle, is the agreement between indicators, right? But let's add on some of our additional indicators we looked at before, and we'll focus on support and resistance here. So if you're wondering why we might be experiencing, sort of this pause or this kind of battle, right, in the markets today, well, we can see here that the resistance that we're at is fairly heavy. We've already tried to break that resistance level one time on 6/11 and unfortunately failed to do so. So when we fail off of a resistance level, it's good to be a little bit more cautious as you reapproach that failure point from previous. We want to learn from the failure before, not make the same mistake again. So whenever we're up against resistance, you do need to be a little bit more cautious, especially if we've already failed off of that level. So we talked about having enough strength to really push through those levels of resistance and or support to the downside. Because keep in mind, everything we're talking about has been bullish expectation because we've largely been in a bullish trend lately. But you could invert all of these signals for bearishness as well. And, if you like to trade short positions, then fantastic, whether your options, again, everyone's a little different in their strategy, but you can trade either direction, right? VantagePoint's not biased. You can trade to the upside, to the downside, or sideways if you like as well, for all of my options traders out there as well. So let's take a look as we see the resistance level approaching. Let's look down at our levels of strength here. And again, we see that mixed signals are coming from those strength indicators down there. Those predictive strength indicators, the predictive differences, tell us the story that we're struggling at this point, that although the trend looks bullish, we don't have a whole lot of strength. And so with that, we would have been potentially very cautious today. And now, again, that's completely up to you. But, I tend to agree with the artificial intelligence. I know it's smarter than me. That's okay. I can admit it. I can humble myself when it comes to the AI. All right. And so I think we all need to do that sometimes, is realize when technology is working for us. And in the case of the predictive indicators here, man, oh man, let me tell you, time and time again, they just amaze me. Doing this for, over half a decade now, specifically with the predictive indicators here in VantagePoint, absolutely amazing. So let me just get some of my drawings off the screen because we're going to jump into those momentum indicators. Who wants to see more momentum indicators here in the session? Because we're going to add them here just quickly to our chart. You can see just how easy it is. Add the indicators you want so you can evaluate them. All right. If they're a part of your strategy, they should be evaluated. And we can see even our shorter term stochastics is giving us a bearish signal here. So again, when you have conflict between the indicators, we know that there's going to be a little instability within that trend. And keep in mind, that doesn't necessarily mean that you have to, exit out of the position. It just means that you need to manage that accordingly. Now, maybe your position management strategy says you exit at that point. Maybe it says that you're waiting for the dip and maybe you're looking to add to that position on the dip. But ultimately, you knew at this point last night at 6:30 that there may have been some contention in the markets today and that you should be very cautious, which ultimately is going to help reduce your emotion during the trade day because you were already privy to this information. You already knew that this was likely to occur. So it's not coming out from around a blind corner and scaring you, right? It's just you're assessing the information for what it is and appropriately adjusting your strategy to account for the increased risk, right? And that's where you get a really, really powerful trade strategy that's backed with technical analysis, backed with data, and you can trade with confidence. And so as we can see, from those momentum indicators, we're just going to quickly jump on over. I'm going to just save this as our default chart so we can look at that very quickly and copy that over to the next chart so we can see those indicators as well. So looking at the cues, a little bit of a struggle here too, right up against resistance. Are we seeing a similar story starting to take place? We should be, right? And again, these are tradable. These are the ETFs that are going to follow the S&P, the NASDAQ, and the Dow. So these are tradable. But if you were to try to trade the indices, I mean, we're talking a lot more than, $5.30 per share on the futures contracts, right? So these are all tradable, just as other ETFs are as well. And again, very similar story shaken out. We can see through our predictive analysis up against resistance, right? With bearish momentum coming in, mixed strength coming in, although we are still bullish. So guys, again, this is sort of proceed with caution. I'm not saying that we're out of a bullish trend here or that we should look out below, but you should exercise caution here and make sure that you do have some of those risk parameters set in place so you can protect yourself should that come. And you'll be able to see what the expectation is tomorrow so you can even more adequately prepare for that trade day to come if you're using VantagePoint. And if you're not and you need more information on how to get these predictive technical indicators, then of course, you can just go to that VantagePointForecast.com. So let's take a look at a couple of other markets. I'll briefly just open up the diamonds for you all to see here very quickly. You can see again those mixed results giving us a little bit of caution as well, more than a little bit, right? But let's take a look at some of those ETFs that follow the mega cap stocks, because that's so important to understand where to find other types of opportunities. And so one of those, of course, with Tesla, you could look at ARK specifically has a very large market cap or capitalization when it comes to Tesla. So if we look at ARK, we can see that this compared to Tesla, and this is kind of where I wanted to showcase the difference between the two. So if you look at Tesla itself, you have a price per share of right around 330, right? Let's just call it 330. We'll just round, right, for simplicity's sake. But if we go over to ARK, which does, incorporate Tesla into its holdings, you can see that we have a much smaller price point here at $66. So even if you can't afford to trade Tesla, it doesn't mean that you can't trade Tesla, right? You can't say no in the markets because there's always something else that will, give you that opportunity, maybe in a slightly different way. You just have to be innovative and find these markets. Well, how do you find those? Well, you can even use the IntelliScan, which is a proprietary, it's a scanner that we use with the predictive data, the predictive indicators to help you find bullish opportunities like this. Now, the difference here as well when it comes to ETFs is that you also have diversity within ETFs without having to manage, 30, 15, 30, 40 trades at a time. Now, if you want to do that, absolutely go for it. But you already get that diversity with ETFs. Now, I know from the chat that a lot of you are trading ETFs already. And for those of you who are not, ETFs are essentially a basket of stocks. And so you're not trading just one asset, but you're essentially diversifying amongst those assets that are included in the ETF to give you that diversity. And so we can see, and I'll just actually pull Tesla over just below ARK so we can see those side by side here. Yes, you can look at multiple charts at one time here. So we can see that Tesla here on our chart and ARK here on the chart, looking at the 3 month and 3 month. Let me close this out just so we can see this a little bit better. There we go. You can see they have a similar trend, but ARK is smoother, right? So we have a little less volatility happening here in ARK than we do in Tesla during that same time frame. And why? Because the trend movement here in ARK is not solely relying on Tesla. There's other assets in ARK innovation that are going to help to bolster that trend even when Tesla maybe has a bad day. But it can also go towards, helping that trend as well, but at again, a much smaller price point. So I'm just gonna pull that Tesla chart back up so we can see ARK just a little bit bigger here. And recently here, if you notice the difference between the two here with Tesla versus ARK has continued to run up even though Tesla is slightly struggling. And this can lend itself towards that diversification, and diversification is ultimately going to help you with that risk management as well, because you're not putting all of your eggs in one basket. You've got a lot of eggs in that basket as well. You're not just betting on one, you've got many to utilize and lean on for the trend. So let's take a look at this ETF. Again, we're going to look at this the very same way we did before. So here's a shorter term expectation. If you like to get in and get out, you can still do the same thing with ETFs that you do on individual stocks. These are equities, they're traded like equities as well. And ARK is just one example that we can utilize to look at a short term trend, looking at that medium term trend expectation, looking at a longer term, more conservative expectation on our long-term cross, or then even on that triple cross, remaining in through that trend and continuing on up. Now, of course, hitting resistance, we do see a little bit more strength coming into this market than we did on Tesla here, but still, being cautious as we're up against resistance. That's our main red flag happening here, but we're still reading our indicators very much so the same way. So there were some other ticker symbols that I saw come in through the chat. So let's look at things like XOP. This is going to be your oil and gas sector or industry, if you will. And so understanding what the industry ETFs are doing can also guide you into what areas of the market are really moving very quickly at this point in time. And so if we look at XOP here, we can see that we do have bullish expectation, but we are deep within resistance as well. So when we look at our indicators from our shorter term crossover, we do have bullish expectation. We do have our medium term on bullish expectation. We do have our long-term bullish expectation. And then we also see our triple cross as well in bullish expectation. And then we have our neural index here. 2 of the 3 predictive differences are coming up, which does, again, we have a little bit more strength than before because 2 out of the 3 are coming up, but the short term, we have a little bit of caution here. Let's take a look at our momentum now, because that was a key giveaway from some of the others before. Now, our MACD, that moving average, convergence and divergence, is bullish with the blue line over the black. The yellow line over the black still bullish on stochastics here, giving us more confidence on momentum. Up on the TSI, and then also RSI continuing up above its overbought threshold here, so giving us that bullish expectation. We have a little bit more confidence here. Now, if we look, our predictive trade candle that we talked about earlier is red on the top. So that's a little area of caution that we might start to see some slowing of that bullish movement, because we did move at sort of a rapid pace here, right? There's some fundamentals at play as well, but don't for a second think that the fundamentals that are happening aren't being picked up in the data movements behind the scenes. There's so much that we as retail traders don't necessarily see. We're not privy to the information. Those minute fluctuations in the data over time is what is built into these predictive indicators. So, we see these fundamentals having an impact in the market in the data before it really ever reaches the news oftentimes. So use the predictive technical indicators can help you anticipate those movements and not have to wait for someone to tell you on the media and be unsure. Uncertainty is not great, right? It leads to probably poor trade decisions. And if not, then you probably got lucky, and luck is not a strategy when it comes to the market. So let's look at a couple of others here. Thanks guys for typing these in. And DNN is one where if you knew that oil and gas was expected to continue on its bullish trend, where there was market movement there, then you could have identified areas within the sector that could potentially continue in that bullish movement. And so here we had a big jump up that happened yesterday on the 16th. And so with that, do we have bullish expectation here? And we can see we do have a bullish trend. I'm just going to walk through our crossovers here just to show you how simple this is. Look for the confirmation, look for the confidence. All right, we have a bullish crossover on the short term. We have a bullish crossover on the medium term. We have a bullish crossover on our long term. And then we also have our triple cross giving us a bullish expectation as well. Notice we never broke down below that T-cross long level. That darker blue line I pointed out earlier. Guys, this is an example of that bounce off of support. We had our verified support level right here. We saw that bounce and we're unable to close below that triple cross long line, giving you the information you needed for the bullish expectation here coming in, and then also coupling that with your predictive differences as they start trending up and that break of resistance. So let's zoom on just a little bit closer here so we can see that predictive trade candle here. And I just pulled this up so we could see exactly what the range was for today. Now this assets days range was between 177 and 187. So I'm gonna let you guys take a look at this for yourself. I'll put my crosshairs right there on the predictive range for the day, and we can see the predicted low was expected to be 178 and the predicted high 189. So within a couple of cents of each other. That's powerful right there. I mean, I say literally a couple of cents, like what, 2 cents on those assets, or on that range rather, the high and the low. So just fabulous stuff here from VantagePoint. And so with that, we can see the close being here right around 183. Did we close above that above that resistance level rather? And the answer is yes. And so we do now have 2 consecutive closes. So of course, if we can continue that bullish momentum, then we could have potential for breakouts here. And those are the things that you can look at for your opportunities. Now it's going to largely depend on whether you trade up against resistance or not. We do have another resistance level sitting right here, right above that resistance level that we're currently in. So we do need to be cautious as we approach that. But you can see how leading yourself through these predictive indicators are really going to help you navigate how to handle that trend, how to handle that position, whether or not you want to enter that position or stay away and find something else. Boy, you guys have got a lot of requests today, and I absolutely love that. So we're going to, I love going through the live analysis with you guys as well, especially when it comes to the new ETFs. So this is one of the emerging market ETFs. And so here we can see that we have a bullish trend that has shifted now to potential bearishness. And so when we see this potential shift, we can look over, and this is a great example of that sort of reversal scenario where we've kind of come out of this bullish trend now, and we're expecting some, potential strengthening in the bearish direction. So if you like to short markets, then look for these bearish crossovers, right? Or maybe this is what you're looking at for your exit strategy. And so as we hit resistance, We did not have enough momentum, especially in our predictive differences right on down here, to push us through that resistance level that was established back here around 524. And so with that kind of waning strength from our bullish camp, then we started to see this bearishness take precedence. And as we see the bearishness sort of play out, we can see the predictive differences starting to shift and our strength gaining bearish strength here within the trend. And then let me just clear some of that off there. Then we can see even on our additional crossovers, watch how these progress. Our medium term then gives us a fresh crossover just yesterday on bearishness. So now we have 2 out of our 3 crossovers giving us bearishness. We can also switch over to the long, seeing that we do have the longer term crossover starting to shift that direction as well. And again, we look at our triple cross with that yellow shading here telling us that, whoa, we're really cautious here because of the movement or the bearish strength that we've started to see. Now, bearishness on our neural index, predictive differences are gaining bearish strength. Let's look from a momentum standpoint. We have actually been bearish in momentum for quite some time on that MACD. Stochastics confirmed here as well on 613 and RSI. So here on 613 is where we have full agreement from those momentum indicators of the shift from that trend. Couple that over with your medium or shorter term crossover as well. Short term cross here, looking at our neural index. So if you like, to short the market, here's another opportunity for you where you could potentially look at this and say, okay, well, the expectation is bearish. So what are you as a trader going to do there? How are you going to work that again? If you're bullish, are you getting out of position? If you're looking for bullish positions, this might not be the best market for you. I mean, ultimately you can do what you want, but when I see red, I'm certainly not thinking bullish. I think that will forever be ingrained in my brain at this point. So looking at overall how you can find additional markets. And again, this is at a lower price point. So we're at $61 here, and there are so many additional ETFs that you could look at that have those lower price points. You might not want to trade the futures market. You might not want to trade oil, but you could certainly take advantage of some of those trends, whether you're using them as a guide for the industry to find additional assets, or whether you're using them to trade yourself. So looking overall at all of the trends we've gone over today, it's imperative that you understand what the industry is saying about those markets, especially in regards to those mega caps, because those industries will oftentimes be a precursor of what's to come. And so using the ETFs to better understand what those markets are expected to do is vital. It's really an assessment of the market conditions to come. And if you can give yourself a heads up into what to look out for, it's something certainly well worth your time. And then also those lower price points. So lots of different ways to utilize the ETFs that are in fact incorporating those mega cap stocks. If you can't afford that price point, well, don't count yourself out of the game. You can absolutely use ETFs to still trade those types of assets and still, keep your head in the game as well. So we're gonna be with you again next week for another live stream. But if you enjoyed today's session, learning about support and resistance, momentum, and also how to find additional opportunities in the market, don't forget to like and subscribe. But we'll be here next week, and I hope everybody has a fantastic rest of the day.